Good morning, everyone. This is Matt Tooher with Insurance Agency Marketing. I'm on the annuity side with IAMS. Been here a long time, seen a lot of changes over the years. I'm glad that we could be joined this morning by Gabriel. He's our internal specialist with EquiTrust. They have a very competitive long-term care combination annuity, and we've been seeing a really nice increase in sales with this contract over the last, I'd say, year and a half. And I know they just had some announcements they announced for this year, which make it even more competitive. And I know I've got a couple sales that are in the works right now, going to be coming in here, and a couple are pending. So definitely working out really well with EquiTrust. Been a long-term carrier partner of IAMS. Appreciate all the hard work at their office, and they always come out with some extremely competitive products in the annuity field. So glad to have them on board this morning, and glad to have you as well. We're looking forward to a good day here, and looking forward to warmer conditions the next couple of days. So that's a good thing to have. We appreciate you being on. We have our new producer builders continue. We offer different incentives based on production in the first 180 days of being contracted through IAMS. A great way for you to earn some additional items, including seminar systems, cash, iPads, travel, a lot of good stuff we offer based on production the first 180 days of being a new contracted agent through IAMS. And we've been doing this for a number of years and have some great success with that. And we also offer a referral program. You refer agents to IAMS, you get a override based on their production. A great way for you to earn some additional dollars based on those referrals. We pay these out quarterly. I know I always have agents calling me asking when that check's going out and to verify how much there's going to be. So it's always on the top of their minds. Good way for you to earn additional money based on your referrals. We also have a marketing reimbursement program. We help with your costs for marketing. We reimburse half of your costs. So if you have a $1,000 bill charged based on maybe renting a hall or maybe a dinner you put on, we'll reimburse half of that cost, which would be $500. Your bank account grows based on production. You get $100 for every $100,000 of index annuity premium added to your account, $200 for every $100,000 of single premium life premium. And we also have a life target, $200 for every $10,000 of target premium. So good way to build up those coffers and have a really nice balance for marketing. I know we have agents send me their billings all the time, get those onto the accounting department, and then go ahead and get those paid out in a timely fashion. So good to have that available to you as an agent. We also have a great back office support team to help you out with all the minor details, major details on new business, contracting, getting all your training up to speed. A lot of different things have to be done now in order to submit business. They make sure everything is in order before we submit the business and get everything moving. I know we have a big increase the last couple of years on e-applications being used. It really helps with the process, a lot of less hangups. We see a much smoother process when you utilize the e-application systems, and that is available on our website. It's under eApp Solutions. We've had our own website here for probably over 25 years now. Really good location to go to pick up details on product training, products, downloading forms. Maybe you want to get a quotation on an income rider. All that can be done on our website. We've got a great tool that can compare income payouts. We have our annuity updates that happen daily with one of our third-party administrators on interest rates, and a great program. You can plug in your state, the age of the client, how much they want to put in, what duration contract you're looking for. We have one specifically for MIGAs, one for indexed annuities. You can plug those details in, kind of compare both sides, see who's got the best deals going. Really good tool we have available right there on our website. I know that EquiTrust right now is at the top of the heap on income payouts. They're very strong in that space right now. We see a lot of income programs going to EquiTrust, and a lot of good stuff that they have available for you on that side. As I mentioned, we have a great e-app solution program right on our website. Firelight is we mainly use on the annuity end. I know that there's some other programs that are utilized on the life side. Not too familiar with those, but we can always help you through that process if needed. We have a great creative team that can help you out with advertising. Maybe you want to do some social media advertising or send out an email blast or put together some brochures or flyers to send to clients. We have a great drip marketing program we have access to. A lot of really good stuff you can utilize to get in front of your clients more often, get those referrals, write more business, and just really just expands out based on your programs there. As I mentioned, they can help you out on the creative side with maybe, developing a website, recreating maybe a company logo, redoing your stationery. They can help with all that, maybe put together a specific program for you as an agent. We do our marketing analysis with you, figure out where your strengths are, maybe where some of your weaknesses are, maybe what you should be doing more of moving forward to get in front of more people. But really good programs of interest there for you. We also have our wealth management team. It's a great group of individuals that work on the security side. We can help you out with your Series 65 exam. We can help you out with, that whole platform. I know we see a big increase in the number of our top 40 agents. They're now contracted on both the insurance side and the security side. That's gone from maybe, 10% of the people had both. Now we're seeing more like 60 to 80% of people that have both their securities license and their annuity/insurance side taken care of. So good way to, for retention for clients, obviously revenue, it's a good way to build up a recurring revenue stream based on AUM business. But really good to have both sides covered. That way you're not referring someone down the road. They end up leaving you down the road because they can handle more than you can. And you hate to have that happen in your situation, but definitely a good program to take advantage of based on that security side. We do academies about once a quarter. I know we have our first one coming up the 8th through the 10th of April. And we have a couple of sponsors on that one. And that's coming up the first part of April. It's going to be Wednesday through Friday. We typically have a number of very qualified speakers who will be speaking at that event. Some great stuff we'll be covering based on lead generation, closing more sales, getting in front of more people. We'll have some really good in-house agents will be talking to you, kind of what they do to, to close more deals, get more referrals, the whole ball of wax. Really good program we put together based on the academy. And I will be calling everyone that's on the phone call this morning, kind of going over what we have available on that space. We'd love to have you in. I know we're doing one in April, one in May. Two really good programs we've got coming up. Definitely worth your time to take a look at us on that side. Some of you want to talk to your specific marketer on the life or annuity side and see if you can't get on that list and be on the way to our next academy. So really good, all expense paid. Most of the expenses are paid for you based on that situation. We also have presence on Facebook and LinkedIn. I know we do some special advertising in both social media sites, run some special programs on that end, a good way for you to take advantage of those based on your connection on both sites there. Again, appreciate you being on this morning. I'm going to go ahead and get Andrew on. And
yeah, thank you for having me on today.
Yep.
Share my screen here. Give me one moment. And we'll jump on to the new exciting enhancements that we've got going on here. So
definitely. Your screen is now on.
Awesome. Greatly appreciate you having me on today, Matt.
You got it.
My name's Andrew Gabriel. I'm the internal wholesaler here at EquiTrust. I've been here about 2 years now.
Yep.
we've
You may
had.
want to change that screen you got up. You got something that's going on
Oh,
here.
apologies. Let me look
Yep,
here. Oh, yes. One moment.
you got it. Here we go. Need to get to the slide presentation.
Let's see here.
You got it. Not up yet, but I know you're working on it. Again, Andrew is our
All right.
internal specialist at
Perfect.
EquiTrust. Your
Is
slide
it
is
back
now
up
up.
now?
Yep,
Okay.
back up. Building on a
All right.
bridge. You got it.
All right. Excellent. Sorry about that. Technical difficulties.
No problem.
Just wanted to, like I said, thank you for having me on today, Matt. Like I said, my name is Andrew Gabriel. I'm the internal wholesaler here at EquiTrust. Bridge has been an exciting product for us, definitely for sure, since October 2022. Assured Allies, our partner. They are a research firm that does long-term care, has a bunch of actuaries and different PhDs that came to us here back, like I said, in October 2022 to design this product and asked us if we would be on board of, being the distribution partner to sell this product to agents, and so it's been an exciting ride. We've grown year over year. I think we've probably more than doubled each year. And 2026 looks like it's even off to a better year than last year as well. So here, as of January 1st, we added some new enhancements onto our bridge. We'll go over some of the new enhancements, and then we'll go over what is bridge again for some of you that may not know what bridge is. So we'll go over that, and then we'll see if you have any questions. So today, some of the key enhancements as of January 1st of this year. Transition roles, we really won't have to go over those because it won't be in play. What is bridge? Then the bridge differentiators. Talking a little bit about our Never Stop Health Coach program, rewards program on there. Do a case study, share some of the sales opportunities that we've been seeing, and then also share the bridge microsite where you go to do all of your whether it's underwriting, running an illustration, or actually doing the digital application on that website. All right, the key enhancements that did come up here on January 1st, we lowered the minimum issue age from 55 to 50, so that's a big deal there. We increased the benefit-based roll-up from 2 to 3%, and then also a coverage ratio extension that we'll share with you here in a little bit, and then updated the wellness credit calculations. So, like I said, on the minimum issue age, we lowered it from 55 to 50. We saw a lot of agents wanting that. Obviously, there's a lot of people out there that do have money sitting on the sidelines. It's a great opportunity to get them in something right now so they can take advantage of the roll up for this LTC benefit. The long-term care rider, like I was talking about, the roll up increased from 2 to 3%. As you can see here, it grows for an annually for up to 20 years for the roll up. So depending on what amount you put in times your coverage ratio, and it grows at 3% compounded annually for up to 20 years.
And that can make a big difference on your coverages. And I know that when your client files a claim and they get those 60 months of payouts, I mean, they pay that out at that dollar amount every month, for up to 60 months. And that can be a pretty decent sized number. And if you have a 10-year, 15-year delay between the time you buy the policy and you start taking the claim on it, you're going to see a significant increase in coverage. So it's
Right.
definitely worthwhile getting a sample illustration.
Yep.
Show me what putting $50,000 would do and put in $100,000 would do, maybe $150,000 would do. You can really see that grow and really give them a nice payment for a number of months. So definitely worth getting that illustration.
Exactly. So the next enhancement we had is our coverage ratio. This is a flexible premium product. So initially, before January 1st, when they added money to, say, the second year, they wouldn't get a coverage ratio. So only in the first year only. So now we've added it, extended it out for 5 years. So say they put 100,000 in day one and got the coverage ratio, and say they put in another 100,000 in year two, they are going to get the coverage ratio. Year three, same thing if they keep continually putting money in. Although there is a face amount for LTC benefit of $1 million, so it can only go up to that. So depending on what your rating class is, depending on how much you're putting in as well, and all of that. But that's a great additive there for sure, for that multiplier, that it helps out and definitely compounds the LTC benefit.
And that coverage ratio is based on kind of what you get issued at preferred, standard, or guarantee issue. And typically the preferred is what, 3-to-1 coverage ratio, and the standard's
Yep.
2-to-1?
Yep, as you can see here, the coverage ratio is preferred, standard, and secure. So age 50 is our lowest age now, 330%. So somebody puts in $100,000, 330%, that would be a $330,000 LTC benefit day one. So, and then imagine putting in another $100,000 in year two, they're getting another $330,000 LTC benefit. So total of 660,000 right there when you've only put in $200,000. So definitely goes a long way.
You there?
How much you want to supplement and things like that. Obviously, we don't know what care is going to look like in 10, 15, 20 years. But obviously, at the end of the day, knowing you have a supplement goes a long ways.
And one thing to also keep in mind is, a lot of people are always concerned about, what we're going to be issued at. And the majority of my people that I've had apply for this have mainly been issued at preferred. I think you guys get about what, 75% of the people that apply get preferred?
Yeah, it's about 70% preferred, 20% standard, and 10% secure that get
Mm-hmm.
that rating. Yeah, so definitely, it's one of those things where, and that's something we'll go over in the bridge here in a little bit about the underwriting. But underwriting, we don't go after any medical or prescription records. It's strictly 7 cognitive questions and 7 physical ability questions. So obviously that goes a long ways too, because there's 5 pre-screening questions that they have to answer in the beginning. But other than that, you do a Zoom video that's less than 25 minutes, that you do that, and then you find out that same day what you would get for a rating class.
That's great.
And then the other enhancement that we had is on our wellness credits. This comes into play for our health coaching when they do have the money already in play. The health coach will reach out to them after they get on board, and they'll discuss with them exactly what objectives they want to achieve, because at the end of the day, what we're trying to do here is not to keep them sedentary. Want to keep them active, and if they achieve these objectives, then we're going to give them some monetary value on top of that LTC benefit. So in this instance here, what we've done is we've changed the way we add the benefit on. So it used to be that we would take the LTC minus the accumulation value, that would be your net amount at risk, and then we would put the monetary value on top of that. Well, now we haven't done that. It's going to be strictly on the LTC benefit amount, period. So that is a huge deal, because obviously with the LTC amount, you're going to have a lot more there to be able to put monetary credits onto. So that's a big win for the clients as well, for sure, in regards to and I'll show you here in just a moment in a PowerPoint presentation, a slide that will show you the monetary value for this Never Stop program. We'll move on to the transition rules. This doesn't really apply to anybody now since it's past January 1st. Now talk about what is Bridge. Like I said, some of you that don't know what Bridge is on this call today or will be listening to this recording, at the end of the day, it is an index annuity chassis with a long-term care rider onto it. So it's a hybrid long-term care product. So the beauty of this is that you have a lot more flexibility within the product to be able to have access to your money if you need it. Unlike true long-term care, it's a use it or lose it. You're paying premiums in, and you don't know if you'll ever have to need it. So with this, say they 10 years, 15 years down the road, they decide they don't want to use this LTC benefit, they can take out that cash value, whatever how the index has performed, and walk away with that money. So there's a lot more flexibility with this product.
And EquiTrust does have, the highest rates I've seen of any long-term care combo policy. Their caps are way higher than anybody else, and their fixed rate is also very competitive. So
yep,
the clients are definitely going to be making some good monies on these contracts.
Right. And so like the bridge differentiators of the, our other competitors, obviously tax for growth, premium growth, but where we set ourselves apart in that is that we're an index annuity chassis. A lot of our competitors are going to be a fixed annuity chassis only, that offer 3 or 4%. Where, like what Matt was just talking about, our caps are at 9% for S&P 500. Our fixed bucket is going to be 5%. So a lot more potential growth there for the accumulation side too, which is always very appealing for clients too as well. So they kind of get a win-win situation where they get potential for higher growth and obviously the potential for using the long-term care rider as well. And then you can see guaranteed approval for tax-free LTC benefits. So when they go on claim, if they fail 2 of their 6 ADLs or cognitive impairment, it's going to be tax-free for up to 5 years. It is indemnity-based, so they don't have to submit receipts for any of the funds that are coming in, like true long-term care does. And then also, obviously, the ability to earn additional LTC benefits through Healthy Actions. We're talking about that Never Stop program that we just talked about. Here's the Never Stop Health Coaching Rewards program that we were talking about. Like I said, the coach will reach out to them and they will be able to try to figure out what they want to, they can make a plan however they want to from the standpoint of what objectives they want to achieve. Obviously, when they achieve these objectives, they will need to prove that they are doing them, of course, in order to get that monetary value. So we have some great marketing pieces about Never Stop that is on the Bridge microsite that I can share with you, the website here soon at the end of this PowerPoint presentation to show you where you can find those and all of that good stuff. So, but this is an excellent program. It's just $100 per year. But like I said, at the end of the day, we're just trying to keep them, not sedentary, try to keep them active. And if they achieve these objectives, give them a little more added value to the LTC benefit. Now here's a case study on the Bridge product. This is Derek, 55. He's got 400,000 in retirement accounts and other assets. Concerns: live it independently as long as possible, preserving and growing those assets with obviously that index annuity with principal protection, and then not burdening his children for assistance as he ages. I mean, obviously that's a number one there is, you don't want to have to blow up, your loved one's retirements or even blow up your retirement, that is. So here, the Bridge at issue is age 55. He puts in 100,000 from his savings. It's non-qualified funds only for this contract currently right now. It's a $50,000 minimum, but in this example, he put in 100,000 for savings. He got in the underwriting, he got preferred. So at age 55, that's a 325% coverage ratio. So the initial benefit base would be $325,000. So as you can see here, 15 years later, he goes on claim. In this example, he is injured in a car accident. Obviously, this is not, failing or going into long-term care, but he is unable to perform 2 of his 6 ADLs. So in this instance, 15 years later, his benefit base now is $506,339 divided by 60 would get that guaranteed monthly payment of $9,237. Now you can see here the wellness credits, like we were talking about. $47,000. This program is only $100 per year, so that's a pretty big, nice little added value to the LTC benefit to be able to just achieve those objectives your health coach is talking about, and be able to get those credits over the these 15 years that he was aging and things like that. So to make an example of this, since he was injured in a car accident, more than likely he's not going to be failing 2 of his 6 ADLs probably for for 5 years, I always make the example of, let's say the client is rehabilitated, for 2 years. So they're getting their payments for 2 years of $9,237 monthly. But then let's say in year 3, because the doctor does need to renew our form saying they're failing 2 of the 6 ADLs every single year. So in year 3, now he's not performing 2 of the 6 ADLs anymore. He's be able to perform all of them. So he's not failing them. So this benefit would stop. Okay. So that would make him, say, like I said, 2 years later, make him 72. But let's say at age 80, then now he comes into a long-term care facility and a long-term care event. Now he can turn it back on. Now he has 3 years left of payments, but the payments are still going to be the $9,237. So once he turns this claim on, then that payment is locked in for the contract. So he could still claim the next 3 years of $9,237 monthly until that 5th year is up, and then the LTC benefit is over with. So this gives you a good visual of kind of an example of it. But once, like Matt said, you can definitely get in there and run illustrations in the Bridge microsite to really show you more of a visual of, whether it's you want to show preferred, standard, or secure, just to kind of give you an idea of what they may get in their time of need. The sales opportunities, what we've been seeing is, 1035 exchanges from annuities or life insurance annuities that have low participation rates or caps, life insurance that have low, cash values. Great opportunity to get them something like this. Like I said before, our rates are very lucrative. A 9% cap on the S&P 500. 5% fixed bucket, get them into something like this so they have higher rates. Plus now they have the LTC benefit to be able to help them out in, like I said, in a time of need for long-term care. Money market, checking, savings, CDs, anything sitting on the sidelines, great opportunity there. And then clients previously uninsurable for traditional long-term care. So if somebody gets denied in true long-term care from their, doing the underwriting, we have it a guaranteed approval here for LTC benefits. So let's say they can't, even get a, if they're failing to the 6 ADLs right now, that would be an automatic secure rating, but we're still going to approve them. So they can get the secure rating and still go through the application. They don't have to go through underwriting or anything like that, which is nice, and still give them an option to be able to have some long-term care to help them out down the road. And then obviously it's just an alternative to traditional long-term care. And then annual reviews. I've had a lot of agents that do a lot of reviews, or whether Medicare agents or whatever it is, obviously you're probably gonna have annual reviews where you can just ask them, at the end of the day, do you have any long-term care? It's a great door opener to break the ice and really discuss with them what type of product we do have to offer. I know many people probably have already been tried to offer long-term care in the past, and it doesn't sound very appealing, just because, like I said, you are throwing money at something that you may never use. But at the end of the day, that's kind of like any insurance, your auto, your house, your health insurance, whatever it may be. If you never use it, obviously, then you're just paying premium payments. So, but at least with this product, you do have the flexibility to be able to have the cash if you need it, because you do be able to get 10% penalty-free withdrawals from the cash value if you need it. And like I said, if you never do need it after the surrender charge, because this is a 10-year surrender, if you do ever need it, then you can talking about. This is when you log into our agent site, is that you'll be able to see everything here. On the agent site, you'll click on the microsite and then click on Bridge, and this will take you right to the Bridge microsite, where you'll see everything from marketing materials to running illustrations to doing the app, and then also scheduling underwriting. If you're not already appointed with EquiTrust, you can go to agents.equitrust.com/bridge and be able to go in there as well. You just won't be able to do some of the things that you would normally do if you were appointed, like running more detailed illustrations or scheduling underwriting or the application. So yeah, that's is really the exciting enhancements we had on the bridge here for January 1st. Like I said, we have a lot of business coming in, and definitely appreciate the time today, Matt. Any questions that anybody has on the bridge or
Yeah,
anything like that?
couple questions came up. I know one you've already covered. It is a flexible premium policy, so
It is.
the client can add money in for any duration of time they'd like. Of course, when you add money in the first 5 years, you get your additional coverage based on your additional deposits. So you have a client that has maybe CDs coming up due in the next couple of years, and they're going to put in maybe $25,000 here. Start with the
Right.
50, and then keep adding some money in the next couple of years, and they're going to get a pretty substantial benefit,
Right.
especially if they know they get issued preferred, where they're getting 3-for-1 ratios.
Yep.
That's a really good reason to put additional money in to get additional coverage.
Right.
And then
Correct.
a couple things that I've run across in some sales ideas, people that have some sizable gains in their non-qualified annuities, where maybe they put in $50,000, now they're worth 175. And the good thing about it, when you move this money to the bridge, there's no taxation based on the 1035. And then if they do start turning on payments down the road, those payments are tax-free. So you went from taxable gains to tax-free situation. So
Right. Right.
it's a great way, to take some of these future tax bombs, convert them into a long-term care combination coverage. And that way, when they do eventually turn this on, they're going to have coverage and they're going to have tax-free monies coming out that would have been taxed. So
Right.
that's a huge benefit. I mean, you go
Yep.
from, $100,000 gain or a, $200,000 gain, and boom, you erase that taxation on that by taking out those payments to pay
Exactly.
for, the coverage that you have. So
And
that's
the
a
other
great
good
combo.
news,
Yeah.
too is that here in 2026, probably in the latter part of 2026, we are on the docket to have received qualified funds as well. So that will be a big deal. I know a lot of agents have been asking for that. So hopefully that will take place. Like I said, I haven't gotten an ETA, but they have told us that is something they're definitely trying to make happen here in later part of 2026.
And that's really going to step up the sales, because if you take a look at most people, a majority of their funds they have in retirement are qualified funds. They have a 401k, they may be invested in traditional IRAs or Roth IRAs or whatever that might be. And to have an ability to move a block of that money into long-term care coverage is really going to, I think you're going to see 10 times more sales because of
Right.
that, just because that's where the majority of people's money is based on,
Right.
it's all in their qualified accounts.
Yep.
So that's
Exactly.
huge.
Yep. Yep.
Another big benefit you see, on EquiTrust product is, since the rates are so high and the clients are going to be making some really good returns, that shrinks the amount at risk. So what happens is that difference shrinks, your cost of insurance also shrinks, because
Mm-hmm.
the home office has less to insure. And if you really close that gap, and let's say you had triple coverage, and all of a sudden, 10 years down the road or 15 years down the road, that triple coverage, now you only is only, like, let's just say 40% difference in values,
Right.
you're going to have a sizable decrease in your cost. And that's
Right.
really going to enhance the client's accumulation, and you're going to continue to see that, that shrink. So
Right.
that's a
Yep.
huge benefit that no
Exactly.
other company I'm aware of has. So
Exactly. Yep.
that's
I
that's
agree.
really it's a win-win for the client. I mean,
Yep.
they get the coverage up front, they have good rates, and their amount of the amount of costs will keep going down, as long as they're making better returns than what their fees are, which that should be the case. And I don't know any other carrier where you actually see lowering costs based on your coverages. So
Right.
it's crazy how this thing works out.
Yep. Yep.
But I'll
Exactly.
be calling everyone that was on this morning and kind of going a review on this. and appreciate everyone that did join us today. I know we've seen a huge increase in the last 2 years on these types of products because a lot of your long-term care carriers have dropped out of that business, and the ones that have stayed in have had to have huge rate increases. You're seeing 20, 30, 40% rate increases just because very few people dropped their long-term care coverage. They kept them for way longer than most of these analyzers when they developed these plans would thought they'd keep them, which is causing huge claims. And these companies have to keep raising, the cost to the client to help pay for these other people's claims. And that's only going to get worse as, these baby boomers,
Yep.
get older, so on and so forth. And I mean, I saw something today which really caught my eye on something that talked about for every, few years ago, there was 5 people working for every retiree. Now there's only 3 people working for every retiree. So the number of people that retired has escalated dramatically and the workforce has shrunk, and it's making a huge difference, on Social Security and everything else going on. And, having this coverage will definitely benefit your client down the road.
Right.
Anything you want to cover besides what we've covered today at all,
No, I think that
Andrew?
that is it. I think definitely is an exciting time here at EquiTrust from any of our products standpoint. We've got a lot going
Mm-hmm.
on here. We have some of the highest income out there in the industry right now in our market early and market future. Our accumulation bonus products are very competitive. So yeah, we've full steam ahead here at EquiTrust.
Yeah, I mean, EquiTrust is right there at the forefront, especially on income. They're a great place to go also on, stretch IRAs. If you have a situation where you have a parent pass away, the child gets this IRA. EquiTrust is really the only company I'm aware of that allows the client to get a bonus going in, and then they can, depending on if they have to take RMDs or if they don't, they're taking those RMDs, and then at the end of the time period, they can go ahead and transition that account after at the end of the 10th year into a non-qualified account. The client can keep that policy. EquiTrust will just kick out a 1099 for that amount they converted and really have a nice win-win. So my question is, so when they're taking these RMDs out, can they just RMD that into a separate non-qualified account? Is that
Um,
available at this point?
no, there is not. I mean, they would still have to just take the
Receive the
RMDs
money?
out of, yeah, receive the
Yeah,
money.
because I didn't know if you guys would just
No,
send out a 1099 at the end of the year based on how much they, took the RMD
yeah,
for. But
no,
otherwise, I mean, they can take it out and reinvest it, into a new annuity, and that way they're, can get a bonus on those dollars and go
right,
from there. It's a
right.
good way to, get
Yep,
some nice returns based on that.
exactly, exactly.
Yep. Otherwise,
So,
everyone have a great week. Appreciate your attendance today. I know that glad to have Andrew on and
yeah,
kind of go over some of these highlights and what's available with EquiTrust right now. They also have some of the best combination of MYG rates along with comp. They're probably one of the top ones out there. So if you have a situation where you got someone looking for a 5-year rate guarantee, and right now EquiTrust is at 5.25, that's really a good rate. And the compensation they pay on those is very competitive. So also keep that in mind. Otherwise, everyone have a good week. Enjoy your spring coming up. Hopefully get there sooner than later. I know we have daylight savings coming up in about another week. So enjoy more daylight. Otherwise,
uh,
everyone have a wonderful weekend coming up, and we'll talk to everyone in the very near future.
all right. Thank you, Matt. Have a good
Yep.
day.
You too.
All right,
Bye
bye
now.
bye.